Today is Friday, May 27th, and this is the ADM Investor Services Weekly Market Wrap-Up. Our guests today are Steve Freed, Vice President of Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. The thoughts and opinions expressed in this video are solely those of our guests and should not be construed as the thoughts and opinions of ADM Investor Services or Archer's Daniels Midland Company. Quite a bit of action this week in the grain market, Steve. July soybeans and soy meal surged to new highs this week. What's behind the move?
Well, I think that there's three things. Number one, there's been a lot of talk about some short covering, whether it's in the futures or in the options. I think the base and foundation is just increased demand. Talk about more demand, and I think that's helping the markets. This demand is not today. It's more like 6 months from now. But it could be something that we've never seen before. The corn market has had a steady rally since April 1st, and a lot of that has to do with a lower Brazil crop getting us export sales. We're doing 1 million tons a week when we didn't think we were going to do any sales at all. It's kind of get into some farmers selling. The farmer has a lot to sell, and he is selling at these prices, but it's been a while since we've been over $4 corn in the nearby futures. The one lagger is wheat. We just have too much wheat in the world. We saw a bounce yesterday, but the bounce was linked more to too much rain here in the United States, and we're starting to have some quality concerns, both for the hard red winter wheat and the soft red winter wheat crop.
So you think the farmer will continue to sell at these levels? I mean, where is the point? If the market drops back down, does he quit selling? If it rallies, does he increase the selling?
I think right now, for the most part, he's looking at a really good crop. And he knows that if the crop continues to grow like this, prices will go lower. For the most part, he sold out of the 15 bean crop. He sold it earlier, before the rally. He actually sold a record amount of 16 soybean crop to this point. So he is selling that. As far as corn is concerned, he's letting it come a little at a time. It's still below his break even. And so he really would like to have a higher price to sell more of the corn. He has sold very little 2016 corn.
As you mentioned, corn now above $4 a bushel on the rally. Is this justified, the price here above $4? And is there any reason, for the wheat to sustain a rally?
I think it is. I'm sure there's people bearish with the carryouts that we're looking at in both world and here in the United States. China's starting to sell some corn reserves. But I think that there's two factors that we're starting to get into the price. Number one is forecasters are coming out and saying this is going to be a warm and dry summer starting in mid-June. So I think that speculators are beginning to notice that and beginning to add to their positions. I also think that there's some feelings that maybe commodities again have bottomed. April we had a really nice rally in commodity prices, hoping that China had bottomed and hoping that inflation would come back. And I think we're seeing a little bit of buying, whether it's in silver, sugar, crude oil, and now corn.
Alan, lots of debate going on. Will they or won't they raise rates at the June meeting? The Fed Reserve officials talked about the possibility of hiking the Fed funds rate next month. How can the Fed tighten in light of the weaker than expected GDP and non-farm payrolls reports?
Okay, I think it's going to be very difficult for the Fed to raise rates anytime soon. I think a lot of the talk on the part of Fed officials about hiking rates seems to be more psychological than anything else. I think the Fed is trying to talk up the economy to spur consumption. But in the last week or so, we have seen economic reports coming in better than expected. Just yesterday, we had durable goods coming in quite a bit stronger than anticipated, although the GDP today was a little bit on the weak side. So even though the U.S. economy is improving with what I'm seeing, I think that a June meeting is too soon to expect the Fed to raise rates at that point.
So what's the current probability? I know that there's trade guesses as to the percentage of people who actually believe that the Fed will raise rates.
Okay, just Wednesday, the probability was 38% that the Fed would raise at next month's meeting, and now it's dropped down to 28%. So probabilities are diminishing a little bit. also the probability of a December rate increase have dropped down to 78%.
So far this week, very good gains for the S&P 500 futures and the stock market in general. What is your outlook for the stock index futures? I know you've been a bull all along, seems to be the right way. Is it too late to trade this market from the long side?
No, not at all. I think this is a trend that will continue all this year. In fact, I think we can see some new highs for the year in most of the indices within the next 3 or 4 months. So any break should be viewed as a buying opportunity in the S&P.
Turning back to the ags for a moment, Steve, you mentioned weather. Could you expand a little bit on the weather forecast for the U.S. this summer? I know we talked about a shift from El Nino to La Nina. Is that still in the forecast?
Very much so. And right now, we're actually too wet across parts of the Midwest. And like I said earlier, it's hampering a little bit of the winter wheat harvest and may cause some quality concerns. But you have a few weather meteorologists that are still sticking to their guns, and they still think that as we get closer to the summer, it'll be warmer and drier than normal.
You talked about possibly a bottom in commodities in general, with the crude rallying, silver maybe making a bottom, sugar continuing to higher. Is this major change in the market right now, and is it helping the grain markets as well?
There's certainly a lot of debate. Like, it can go back and forth between people. I mean, Alan and I might have different opinions on our sources as to, is crude oil too high? The other question is silver kind of leading the metal markets? We saw copper this week picking up. Is that any indication that the Chinese economy is bottoming? So, when we try to look at different components, it seems like money is trying to buy commodities. It has a cloud over it on whether the Fed's going to raise interest rates or not, and economic growth in Europe and things of that nature. So, I think that there is some people that think that the grains could percolate here and move up seasonally because of the weather. That copper is still on the upside, but on the other side of the coin, they think that maybe crude oil has reached a top and maybe overbought, and that we just kind of have to watch and see how everything unfolds in the metals. But from as far as sugar is concerned, I mean, it's overbought, but there's a lot of forecasts that we're just going to see a drop in production this year that could suggest higher prices.
You mentioned China. Alan, what's your thoughts in regard to the Chinese economy? They had some stimulus, several months ago. Appears like
Yes.
it's worked. They maybe turned the corner. What do you think about China right now?
I think that China has turned a corner, and just today we got news that Chinese corporate profits increased 4.2% in the most recent reporting period. So all the evidence to me points that there is a recovery in China's economy, and this will be a sustained recovery.
Finally, looking toward next week, we have a Memorial Day weekend, Monday, a U.S. holiday for the markets. What's hot and what's not?
Well, I think in the grains, people are thinking that maybe beans and corn have reached a price level that it can't sustain if we go 2 weeks of good weather. Soybean oil maybe could catch up to soybean meal if we've run the course of this meal short covering. And again, I think that people like sugar, people like copper, but we just have to kind of see, what kind of unfolds in the financials. And do you see anything in the financials that is going to push higher or lower?
I see the bond market drifting lower. I think that with inflation likely to increase and the probability of the Fed raising rates at least later this year, that my bias is a bit to the downside in the bond market.
Remember, the thoughts and opinions expressed today are solely the thoughts and opinions of our guests and should not be construed as the thoughts and opinions of ADM Investor Services or Archer Daniels Midland Company. If you have questions, would like to learn more about our risk management and brokerage services, or would like to find an ADMIS affiliated broker near you, please visit www.admis.com.